Okay, folks, good morning. I'm sorry for being late. No internet. I think that was the quickest phone call with my cable company I've ever had in my life. But we are back live yet again. Good morning. Post debate. Drop a 1 in if you think that Trump won. Drop a 2 in if you think that Biden won, out of curiosity. All right. Hey, Chuck, good morning. WG Shocker, good morning. All right. My Exxon's going to be weak this morning. They had last night after hours. They had an inventory draw. Good morning, Emilio. Had an inventory draw on light sweet crude. It doesn't appear to have helped at all. Maybe so. Maybe so. We're on a 4-hour chart. Yeah, we're on a 4-hour chart. All right, we're off the lows. We're holding a support level. We don't want to see new daily lows today. Big day today. Last day of the month. Last day of the quarter. Good morning, Roy. Big day today. There are a lot of stocks out there that really need to show us. They need to bounce back, not just stocks, but also certain commodities as well. I hate getting started late. Again, for those just joining, I apologize for not being organized here. I had no internet this morning. I just got it back from a lovely young lady named Kelly. Very competent. All right. Good. Well, not so good. Dollar broke out overnight. It's pulling back now. But this is probably a retest. Ugh. So dollar's rallying. Where's gold? Gold is one of those commodities that has been under, this is not good. This really needed to pop back today. You know, it broke out on Tuesday above resistance. Maybe it's holding support, maybe not. Who knows? But this is not a good close for gold, because let me bring up the chart of gold. Bringing it up now. I want gold on a monthly basis. Here we go. Let's carry this over. All right. So gold, it really needs to. What did we close out yesterday? We closed above 1903, which is good. But we're even though we closed above 1900 yesterday, we really need to close above 1923, spot 70, or else this is a breakout point failure. And if we see a continuation move lower in October, that's very, very bearish for gold. Very bearish. Now, I'm kind of surprised that we're not seeing a bit more strength in gold, because when we were watching the futures, I was going back and forth with a couple of buddies of mine. One was a member via text. We're watching the debates, and the futures were pretty strong, all the way up through to the question from Wallace when he said, will you concede the election, or will you acknowledge the results of the election? And really, neither one was. None of them said, yeah, no matter what, we're going. I'm going to concede, or I'm going to give up the White House. And all of a sudden, you saw the futures just fade away, melt away. They were up about, the NASDAQ futures anyway were up about 3/4 of a percentage point. So I think that's a bit of a tell for the overall market. With gold, I'm a bit surprised here. Usually you would see when you have a lot of indecision in the market, even if the dollar rallied, you'd see gold rally as well, because that's a safe haven flight trade. Let's bring up the S&P 500. We're down about a half percentage point, but we're seeing some strength. Now, the problem is, I hate to be doom and gloom this year, but we're breaking support levels, so I have to be. The problem is that we broke down below 4-hour support yesterday. Now we're trying to recapture. Is this a head fake? You know, we really need to see it close today above, what is this here? 33.23, 33.24, thereabouts. Yeah, Roy, seasonally not a good period of time for gold. January is when it picks back up again. Let's take a look at the Russell. The Russell's looking okay. It's respecting support. While the Russell is down in percentage terms more than the S&P 500, honestly, it looks a bit better. Not that I would go buying it right now. We did take some risk off the table yesterday. Okay. So it's quite simple. You know, if we begin to break out, it's game on. They're going to shrug off whatever was deemed negative from last night's debates. And also remember, you're going to have fund managers readjusting their portfolios today. And if we break down, well, then it's game on for shorts. We'll be looking to lean into the short side, at least hedge. Not getting that short, but put on a hedge. NASDAQ 100, down about the same as the Russell. We're still putting in higher lows here. Now, I would let the morning settle down. As usual, I rarely place a trade in the morning unless it's a sell order, because I just want to see what direction traders are going to take the market. Are they going to shrug off the morning weakness, or are they going to lighten up and take risk off the table until after the election? Bonds are down. I want to take a quick peek at yesterday's price action on bonds. This is actually not yesterday's view. It's a weekly view. I'm trying to see where we're at on a weekly basis on the 10-year yield. We're flat on the week. But I'll tell you, man, these Stokes, RSI, they're implying higher highs. But given the fact that we broke back down below support last week after breaking out the week prior, you know, the price action is not following suit with the indicators. So let's take a quick peek at the TLT, see whether or not this is the 20-year bond ETF. How we are looking on a weekly basis. We took a look at this last night, and we're on the verge. I mean, I don't know how much time we have left here before we break out or break down. It's tight. And the ironic part is that you have your Stokes doing the same exact thing as a 10-year yield. So both are rising. Very odd. Usually they trade inversely. So the jury's out. The market's going to tell us which way we're going here. If we break down on bond prices, that means that yields pump up higher. What do we want to look at? Hey, Pat, good morning to you. What do we want to look at? We want to look at banks, financials. Not so much tech. All right. Let's go back. What else do we have? Silver. Silver's down. Had a good showing earlier in the week. Coming off the lows now. Ag. Let's bring up corn. Corn broke down. And when I say broke down, it's only on a 4-hour chart. So let's keep things in context. And you can see that RSI has been sending us signals for a while now. RSI peaked out back here. And this entire run up has been on RSI making lower highs. So that's a negative divergence. Let's see if wheat's doing the same. Not really. Not really, because we didn't put in higher highs on price after spiking up. So, no, not the same with wheat. All right. It is 6:45. I got to bring up, for those saying, why is he not organized today? I had no cable this morning when I woke up and had zero time to prep for today. I literally got cable back when we went live, or just prior to us going live. Okay, let's see what requests I have. All right, let's do some chart requests. Eric. Pat, you have anything? Emilio? Desmond, get it together. All right. Solo for Eric. All right, so poll of the group, now that we have a few people on. Who won last night? You got it, guys. Oh, this is interesting. You know, I wrote a tweet. Not that I'm a big tweeter. A couple of days ago, that even if Biden loses, he wins if he shows that he is not as half as bad as what they've been portraying him. I think that it was all one big act that they set up with Biden to have people underestimate him. I think that net he had a strong performance, but honestly, I mean, Jesus, I have to give it to Trump, although I don't think he put in his best performance. And Chris Wallace did a horrible job. All right, so Amelia's got Trump, Patrick's got Trump, WG Shocker, neither. Okay. All right. So this is pretty cool. This chart. This is a monthly chart of Electra. Come on, man. Very good, Pat. Electrum. I can't even say this name, but I like the name anyway. We broke out above one resistance level here in June, July, continuation breakout. Ever since, orderly pullback and a retest of what was support back here in December through February of 19 is now support yet again. So that's good stuff. And this is the exact reason why we don't chase overbought rallies like you saw back here. You would have got killed. Think of all the people that bought up here. Crazy. So we were trading above the third standard deviation Bollinger Band. If you had the patience, you waited, you pulled back. Now you're retesting. Risk reward totally on your side. You buy here, stop loss right below, and you're good to go. So looking good on a monthly basis, bouncing off of support. I don't think we have enough data here to have automated trend. No, we don't have enough data to have automated trend lines. Let's go to a weekly chart. I think this is a stock that could be bought because you're so close to historical support. Why not? You know, granted, I would not get overweighted. And the reason being is that you take a look at all of these candlesticks since July. If you want to include June, fine. But I would go with July. Every single one, with the exception of the September the 14th, has been down A, but all of them, including the week of September the 14th, have had topping tails on them. Why? You have, for whatever reason, a ton of resistance at this price point here at a high of 329 and low of 2.70. So within that trading range, a ton. There's a war going on. I love the Stokes. They're flattening out, despite the fact that they're trading down below 50. They're flattening out. That's what you want to see. Same deal with RSI daily chart. We're in a wedge formation. Nice long consolidation. The longer the consolidation, the greater the validation of the breakout. So is there a compelling reason to go buying right here, right now? No. If you wanted to put a trade on, that would be fine. Ideally, if you were to get a pullback to support, this is where I would be looking to initiate a trade so I could put a very tight stop because my buy would be very small. And this is one where I would keep active because I like the monthly chart, I like the weekly chart, so we'll keep it active for a couple of weeks. We'll show patience. You know, there's a lot of time to consolidate within this wedge formation. You know, we're nowhere near the apex yet, which is right here. So, you know, while we could certainly go moving up higher today, tomorrow, breaking out, you know, from a risk reward perspective, I'd like to see a pullback and a retest. The other option to either use as we did have a little bit of a breakout yesterday. This is like a secondary downtrend line. Another option would be to add or open on a breakout above resistance. I want to keep that really tight, no sensitivity. I only care about the fact that we close above that mark. And again, we'll keep it active for a couple of weeks. And we're good to go. We have a W formation on Stokes. They pulled back. They appear to be putting in a higher low and hooking up. I believe RSI has broken out on a daily basis. Yep, it has. We don't have much data here to use seasonality, so we're not going to go to that. So solo looking good. Longer term, a little bit of, not a little bit, a lot of bit of a volume shelf between a wide trading range on the monthly and weekly charts. But I like to set up here longer term. I'm not sure what the company does, but once we begin to break out above $3.30, it's game on. I mean, there's not much in terms of overhead supply above. So, good looking stock. All right. Who's up first? Emilio, Bntx. Let's pull back. Monthly view. Not much data, but we'll take it. We have 2 consecutive months of lower lows. We have a volume shelf right here. Are we above it? Are we below it? We're struggling to get through it. We've attempted, we've been rejected. Critical resistance right here at 68.24 the share. Let's drill down. Okay. It's not a bad looking chart. It's really trying to come back hard here. I mean, we bottomed out in late August. We've been putting in higher lows ever since. Now it's just a struggle to break out to new higher highs. And again, that 68.24 mark is stiff resistance. It was support here. It was resistance back here. Support here, support here. Now it's resistance. So the smart play is to wait for a closing breakout above 68.24. You know, if you ask me, you know, what about that support level right below, Bob? It looks like it's pretty good support. What do you think? And I would be fine with scratching the itch, as I like to call it. Take a nibble right at, let's say, $66 a share. Thereabouts, give or take a penny a dime. And what did we close yesterday? 66.86? Yeah. So you get down around that point. You want to put an advanced order out there at 66. That's fine. Just use a stop loss on a close below. What was the open here on this candlestick? Open. The open was 65.56. So I'd use a stop loss right there or right down below this volume shelf here at 64.19 if you want to keep it loose, but I would stay very, very small right now. On the breakout, that would be a more interesting point to get a little bit more aggressive, especially if we begin to take out the highs of the week of the 14th. Then all of a sudden you're going to have Momo traders thinking, okay, what's going on here? Something's happening. Daily chart, very, very nice daily chart. Very nice. We broke out on the 25th, rally, rejection at that resistance point we've been talking about. I wouldn't be the least, but you want to call this a retest of support? Okay, I would buy into it. Might we get another one? I wouldn't be shocked. But might we have a nice solid breakout? Sure, I would go for it. But in this instance here, I would prefer to wait for the breakout above, what did I call this again? 66. What is this number? $68.24. Maybe a little bit lower. Oh, it's not letting me move my... Hold on. Let's move this lower. You're embarrassing me here. Let's remove. Okay. Let's try this again. Let's call it $68 a share. A rally through that resistance point and a close above. It's game on. Let me reset this. Okay. And again, we'll keep this active for a while. It's a very nice chart. Very nice setup. In all probability, it is breaking out. All right, we're good to go there. I feel better about, excuse me, I feel better about this resistance level. All right, let's see what else we have. Pick. This is the one you told me about last night, Pat. Okay. And Pat, this is the one with they're swapping out the drivetrains for EV vehicles, the heavy equipment? Or is that another one? Well, this looks like an investment corp. So I doubt they're doing that. Amerimigo, hello from Colorado. Hello from New York, buddy. You're welcome, Emilio. All right, let's go high level here, as usual. All right, not much data. It got way ahead of itself. The reason why I'm dragging the chart over so close to these volume shelves is because the volume shelves by price, these indicators here tell us a story of what has happened at these specific price points. Is there resistance? Has there been war? Has there been peace? And when there's war, if you want to get long, you want to see it hold the lower band of support. If there's very little in terms of price action, well, that means that if you break out, you have very little in terms of overhead supply, and that allows the shares to spike up higher. All right, so Pat just said light trucks class 2 to 6. Okay, thanks, Pat. So here's our range. Lower end of the range is $11.67. Upper band of the range, $12.38. And we are seeing lower highs here on our Stokes weekly basis. That doesn't mean anything bad as of yet. We're still above 50. I get concerned when we're at 50 or flirting with 50 because the following week, in all probability, you're going to be below 50, and that's when I begin to get the sweats. So we could easily flatten out and hook back up, but we need to hold $11.67 the share this week. Daily chart. You can see how they've been respecting it. They respected support here, here, rejection at resistance here, support again, retested here. What I would like to see here, what always, buying a chart like this doesn't make me comfortable where to buy based upon yesterday's close. What would make me excited is, were we to gap down or trade down below support, then only reverse to flash a bullish key reversal bar like you saw here or here, and we close green above that support level after being down on the day, and we do it on volume. If we get that, that would be very, very exciting to me to enter this trade. At current, I'm sitting on my hands. I'm just watching and waiting and seeing, does support hold here? Does it get retested? Hopefully it does. If it holds and we close back above it, great, game on. If it breaks, well, then we could see considerably lower lows. Now, the good news is that we filled the gap, which opened up here on the 18th. We filled that gap on the 24th. So it's a chart that was overbought. The froth is coming off now. It's consolidating. There's no compelling reason to go jumping in with both feet right here, right now. Again, I would hope for, and you're probably going to see it this morning with the futures, at least at last look, being weak. You're probably going to get a weaker open today, and worried, especially after yesterday's price action, a bearish key reversal bar. If you get that, we close strong on the day above support, game on to the long side. Beware that your Stokes are down below 50, but they are, to be fair, beginning to flatten out and hook up. RSI, you don't want to see it take out the prior low at 53.25. You want to see a higher low or the bare minimum, a retest of prior lows, and we are down below 50. So a little bit of a story going on here that the RSI is telling you that you have a little bit of negative divergence going, not negative divergence. You have a loss of momentum, and it's trying to find a floor. So no rush to get long here. Watch for that bullish reversal bar. Okay, what else do we have? Neo from Chuck. On this one, we'll call it a day. We haven't talked about this one in a while. X, and are you still adding? I still own X. Yes, I am adding. I don't know whether or not, I want to share something. I've been talking about, and I've been sharing articles. I don't know if you follow me on Twitter at all, but when I come across articles that validate, I'm going to come back to Neo in a moment. I don't want to switch gears in the middle of a chart analysis. So I want to bring up Zero Hedge. This is the second piece of strong data out of Vietnam. And I've been talking about Vietnam now for a lot of news this morning, for a while, ever since the virus hit. And I said, watch out. They're going to shift supply chains. Here we go. I'll share this. Vietnam cashes in on China exodus. I've been saying this is going to happen for, I don't know, 6 months, 8 months now. I'll share this article. Read it at your leisure. This is the second article where we're seeing a lot of growth out of Vietnam. I read another article with regard to Mexico as well, how they'll probably cash in because as a manufacturing hub, they're so close to the United States, manufacturers will save on the shipping into the United States. So they're going to cash in. That one I didn't expect as much, but we read, we learn, we move on. So why does this matter to steel? It's a shift in supply chain. If you take a look at U.S. Steel during the build-out of China after they joined the World Trade Organization, it's about the same as where we are at current. Rallied all the way up through 2008. Granted, yes, it took 5 years to get there, but a huge return all the way up to 174.71. And you had counter trend moves, nice bear market rallies in between. So I think that we're setting up for a nice run here in a lot of these industrials as the supply chain shifts. This is the longer term portfolio that we're putting together, are these beaten down, hated names. ExxonMobil, U.S. Steel, nobody wants them. But they're not paying attention until, of course, it becomes the story of the build out in these other emerging markets of Vietnam, Malaysia, India, especially India. Hey, Arthur, good morning. So that's my story. I'm sticking to it for now. All right, Neo. We'll leave off with this one. Very, very extended here. But we have been extended. So I wouldn't want to be a guy that says you got to sell. But it is extended here relative to its third standard deviation. Bollinger Band, we're just off the highs of the month. Very powerful. Weekly chart. We have a breakout. Multi-week consolidation. Do we have... No, we don't have any trend lines, except for the ones I've drawn here. So we've broken out. We are, for all intents and purposes, at a previously drawn... It's funny how this works. It never ceases to amaze me. How what was prior support here is now going to act as resistance. So from a risk reward perspective, would I go buying more right here or opening a position right here? Probably not, because we're right off of weekly resistance, or right at, I should say. Daily chart. Listen, if I were long of it, would I sell? No, not yet. Would I initiate a trade? No, not yet. I need to get a pullback here, because from a risk reward perspective, if I'm going to open up a trade, I have very little room to the upside before I'm hitting resistance. So I would wait for the pullback. Where I long, I let it run up and into resistance, then buy back on a pullback. So you have a nice little trading range here going on. You can see it was good back here, failed a little bit, then we're bouncing back. We should resume respecting the upper band of resistance and the lower band of support. Stokes look good, RSI looks good. Looks like on a short-term basis, we're probably going to pop up higher here again, but I would expect it to respect the upper band of resistance. If you're going to initiate, wait for the pullback. And Amerigo, is that a symbol? Looks like a future symbol. I'm not sure what that is. MES. The E-minis. Duh. Okay, so we're bouncing back here a little bit. More important to me is the dollar. Dollar's still holding a breakout point. Let's see if gold is bouncing back. This is a really critical day for gold. We're coming off the lows a little bit, but still, I mean, the last thing that gold needed was a pullback this morning after closing back above 1900 yesterday. And on a monthly basis, and for those just joining in, what concerns me about gold is the monthly chart. We're closing out the month today. Let's go to a quarterly chart, because we are closing out the quarter today. Very extended here. So I think we're, the way the quarter is looking at current. I went into the week optimistic, but cautiously optimistic. I'm closing out the quarter somewhat more cautious on gold because it is extended, and it appears as though we are not going to close back above the breakout point, which is no big deal from a quarterly perspective, but on a monthly perspective, we broke out and put in new highs in July, retested in August, and at current, it appears as though we're going to fail to hold that breakout point. You know, anything could happen today. Hopefully it rallies back, but it's got to rally back big to recapture support to keep us bullish. Chuck, yeah, we bought back in at the lows on the miners last week, but I may need to lighten up some going into the back half of the week. Tesla, let's see where it is from a higher level. It's stalled out on a monthly basis. No new monthly high. If we did, it was a brief. Yeah, we did put in a new monthly high, but it couldn't hold it. We're very extended here. You know what? It's not a bad week, to be honest with you. We're forming a triangle formation. Stokes are putting in higher lows. MACD moves, losing momentum. Let's go to a daily chart. I'll bring it up on TrendSpider as well. God damn it. All right. I wouldn't be the least bit surprised to see a breakout here. A lot of chop here on the Stoke RSI. And I don't use this indicator for all that much, except for this. When I see choppy price action, meaning bounces around, can't close above the 50 mark or spot 5 mark. So I think it's a pretty simple trade, Art. I would just do one of these numbers, take my crayon out, and just beware of that monthly chart. It's very extended. I would not be comfortable staying all too long with Tesla as an investment at current. So here's your trading range. If we break out above 425 the share, what did we close yesterday? 419. And we close there, I wouldn't be the least bit surprised to see another run up to 500. The question is, do we take out prior highs or do we put in lower highs? And only the market is going to be able to tell us that. I like the Stokes, very short term. But we need to break above. For me to get comfortable longer term, we need to get above 461.94, which marks the prior high. And still, that monthly chart haunts me. It's being so extended. So that's my take on Tesla. I would buy the breakout, short-term swing trade, and if I get booked a nice profit, I would be out of it really quick. You got it, Art. Hey, folks, everybody have a profitable trading day. If you could smash that like button, I'd really appreciate it. And I will talk to you soon. Be well.